Chapter 19. Should I start my recruitment business as a sole trader or a limited company? There is no legal requirement to form a company in order to open a recruitment agency. There are several different options to choose from when starting a business, such as sole trader, partnership, and limited liability company. Your choice will depend on your personal circumstances. The majority of our recruitment startups set up their businesses operating as a sole trader. A sole trader is a business that is owned by one person. Of course, it may have one or more employees. The main advantages of setting up as a sole trader are: you can call the shots and have full control of your business. You can set up as a sole trader for next to nothing. Minimum forms to fill in and no costly accountants to pay. All you will be required to do is open up a bank account and inform the tax office. Business affairs are private. Competitors cannot see what you are earning, so will know less about how the business works and how it is succeeding. And best of all, you get to keep all the profit. As the owner, all the profit belongs to you. The legal requirements of a sole trader are to keep proper business accounts and records for the Inland Revenue, who collect the tax on profits, and if necessary, VAT accounts. The flip side of being a sole trader is that firstly, you are liable for any debts that the business incurs. This means that any money that the owner has put into the business could be lost. But importantly, if the business continues to incur further costs, then the owner has to pay these as well. In addition to this, it can be difficult to raise finance. Banks will not lend large sums of money, and you will not be able to use any other forms of long-term finance unless you change your ownership status. Such a risk often puts potential sole traders off setting up in business. Many would prefer to have the added expense and bureaucracy of a limited company for the peace of mind it offers. The principal benefit of trading as a limited company has always been the limited liability bestowed upon the company's officers and shareholders. As a sole trader or other non-limited business, personal assets are at risk in the event of failure of the business. But this is not the case for a limited company. As long as the business operated legally and within the terms of the Companies Act, directors or shareholders' personal assets are not at risk in the event of a winding up or receivership. And as often happens on occasion, such events are not always under your own control. I would strongly recommend that you use the services of an accountant to help you determine the best way to structure your business. Please feel free to contact our support team if you would like us to recommend an accountant for your business. Included in your business startup pack is a general guide to various structures and some pointers as to which one would best suit your business startup.